Hello, I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Welcome to this ESS BIZTOOLS Accountants Minute podcast. Differentiate or disappear. Why your firm must stand. Have you ever thought about diversification and how you could stand out? Those comments, differentiate or disappear, why your firm must stand out, are directed at accountants and bookkeepers and business advisors, but could equally be directed at SMEs. Because in today's modern world, I think we all need to be very conscious of the need to diversify our business activities. Have you ever sat down and had a conversation with someone running a business that's not your client and asked them what type of services their accountants provide? And I think 9 times out of 10, you will hear comments about taxation. And sometimes they will say, I'd like to talk to him or her about some other subjects, but I don't think they know anything else other than taxation. I've just come from a meeting with a business operator with a turnover of $23 million who also had some complaints about his accountant. He said his accountant never ventures any advice. He records the transactions very carefully and prepares the tax returns. He believes competently. But he said he never volunteers anything. He never offers any suggestions. He knows I'm short of money at times because of the projects that I get involved in, but he never makes any comment about how I might go about raising capital. I just finished talking to him about crowdsourced funding equity raising. And he was not aware that whilst his turnover is under $25 million, he could potentially raise $5 million from the public, which would help him out. He's now asked me to submit a submission to him as to how that might work. I did say we'll have to move fast because your turnover might exceed 25 million shortly. I think we all need to look very closely at the services we're offering. And probably it would be a good idea to go and talk to some people who are not your clients over a cup of tea or coffee and get their feedback on the type of services and how they rate accountants. And then honestly sit down and compare yourself to the rating that that business operator has just given you. Differentiation is crucial for all professional firms to analyse and look at. And in our profession, it seems to be more crucial at present, with the former taxation commissioner and who was a former partner at KPMG warning 2.5 years ago that within 3 years, significant changes would start to affect accountants and bookkeepers. And I suspect those changes are underway. But looking at what the former taxation commissioner's advice was, is now only 3 months from starting and 30 months from its conclusion. So it's right on top of us. Things are changing. And we've got AI. It's also affecting our profession, isn't it? I participated in a series of webinars on AI probably about 8 or 9 weeks ago now, and heard a speaker who had previously been a sole practitioner in Sydney, wasn't satisfied with his life or his income, and was invited to go to a seminar and heard some speakers talking about value pricing and decided he was on the wrong track. He's now based in London and then has a business that offers value pricing advice to accountants all over the world. But along the way, he also became an early adapter and is now a senior consultant to ChatGPT to assist in AI. He made a comment at the end of his presentation that compliance work, as you now know it, will not exist by the end of this decade. The key words were this decade, not next decade. And then as an aside comment, he made the comment, unless it occurs earlier. So changes are occurring. There are plenty of other things that you can do, though. And this is something that causes me great concern when I look at our profession. We still seem to be totally concentrating on the tax return process. I want to share with you a bit about my story today. Not to brag, not to seek publicity, but to try to indicate to you the diversified services that of an accountancy nature that I've been involved in, that I have then utilised to frame the development of ESS BIZTOOLS, because I wanted ESS BIZTOOLS to be a very practical product that could be utilised by accountants and bookkeepers. I wasn't carried away with great dramas about software. I wanted the product packages to be documents that you could use to enable you to offer a better brand of services for your clients, to help your clients survive and hopefully thrive in their small business careers. Not to be part of the horrible statistics that the Small Business Ombudsman announced late last year that placed over half of Australia's small business, and there's 2.2 million small businesses, over half in a category of earning less than the national wage. Not very good. What could we as a profession do to improve that horrible statistic? My background is I qualified, having worked in a semi-government organisation involved in the costing section. That was an interesting experience because I understood how engineers use costing reports and needed them to guide them in their process. But as soon as I qualified, I gained employment in a chartered accountancy firm where I did the normal process of preparing financial accounts once a year, had no contact with the client at any other time. And then we prepare the tax return. At the time, I didn't place much emphasis on the work that I did, though, for a public company, because the partner I worked for was the company secretary of 4 or 5 listed public companies. It was an era that in smaller cities around Australia, there was local organisations that were public companies. They were listed. And most of them didn't employ a full-time company secretary and an accountant become the company secretary. That gave me an insight into what happened in public companies. The one I worked on was the local television station. It was very interesting. I didn't know how beneficial it was going to be to me and my career until a few years later. And then I really thanked the partner, Colin Rains, that I had worked for, that I, in effect, served an apprenticeship with to become a public company secretary. But I've jumped ahead. I did 2 years in that chartered accountancy firm, and whilst I enjoyed it, I felt something was missing. I needed to gain a better appreciation of what accountancy was all about, because we just seemed to be filling in forms, in effect, at the end of the financial year for a business, having very little input in the earlier stages. But I had done a bit of auditing work, so I'd seen what was happening in the businesses, and most of them did not have employed accountants. But I saw some opportunities. But after 2 years, I decided to take a step into the future and joined a listed public company in their regional operation as their accountant. And I quickly found there was a complete role to be performed. This particular branch had not previously had a qualified accountant, so I was able to implement key performance indicators, business metrics, reports that could be analysed daily and weekly, depending on what the statistics were. The industry that I joined was in the meat industry, so we had a major export meat works, and we had about 20 retail butcher shops, small goods factory, some other byproducts activities, cold stores. But each of them had their own profit and loss account, and each week we had to prepare the performance report and profitability report for each of them, each week. And it was expected to be accurate because that's what the manager, the regional manager, relied on. And that's what he used to talk to the CEO about every week on a Wednesday. So I observed all that and thought, isn't this a lot better than those clients that I used to work with in the chartered accountancy firm who got no input from me or any of the other accountants in that organisation? And I know that the partner I worked for was not contacting them. So this concept of business health checks was very important for me because it gave our regional manager information that he needed. 3 years later, I was invited to become the Chief Financial Officer and Company Secretary of the listed public company. I was fairly young then, so this was a challenging task. I had to move to Brisbane and Sydney. We had joint major offices. The public company office was in Sydney. I was the company secretary. I was responsible for what was happening there in the public office. We were listed on the Sydney Stock Exchange, now the Australian Stock Exchange. So this opened up a whole new range of activities for me that I'd had no training in, other than that brief involvement I'd had with a public company in my chartered accountancy 2 years. And I'm glad I'd had that, because that was some of the training that I'd needed. This opportunity that I had, I know, is only available to a relatively small number of accountants in Australia. We all can't be public company secretaries or chief financial officers of public companies. But later on, I decided I was going to utilise that knowledge, that experience, to write a product which ultimately become known as ESS BIZTOOLS, to assist accountants and bookkeepers and business advisors to be able to offer advisory services to your SME clients. Because I found working in a larger company environment, there was plenty of requests for my input, for my comments. I might add they weren't always accepted, and sometimes I probably was not correct. But in the majority of time, my suggestions were accepted. And I like to think in the majority of time, my advice was appropriate for the questions that I'd been asked. So we need to look at how I then utilise my knowledge later on to become the building blocks of EOS BIZTOOLS. So the key functions of a chief financial officer, I found first of all was I needed to understand the company I was working for, a company that had been listed on the stock exchange for 50 years. As far as I could work out, had not prepared a budget or a cash flow forecast for many years, maybe never. They had operations in the 3 eastern states of Australia. They had systems all right, but I had to understand them. I had to understand who owned the assets, where were the title deeds, where were the lease agreements, what was our responsibility under those leases? Was that clearly documented? Who had authority to make purchases? We were running 10 to 13 branch operations around Australia. What authority did the branch managers have? Was this updated at any time? What were the risks that we were encountering? And some of them were different depending on the locations. Was there an understanding of them? What was the control over the sales team who were making sales on international markets? Did we have an awareness that in some organisations there had been fraud created whereby dishonest sales personnel were having a dishonest purchaser put a 25.25, or 0.50 cents in a transaction into a Swiss bank account? Difficult to observe, but every year I used to discuss this with our external auditors. Have you ever had those sort of discussions with your clients? Some of your clients could very much be in exactly that same position of worrying about the internal control. Who could hire staff? Who could set their salaries? Who was responsible for purchasing? Who paid accounts? Company I was with had bank accounts operating in the various locations to facilitate prompt payments. What controls were there? I instigated a weekly declaration of the financial position of each branch so that I could formulate a report on a weekly basis, which we submitted to our bank so that they knew what our cash requirements were going to be. Even though we were operating within our negotiated limits, they also wanted to see where we were going because we were exporting, and exporters can be affected by a lot of things. If it rained or we had floods or cyclones, it would curtail meatworks operations because we had no livestock. And once you exported, you were in the hands of the shipping companies and then the longshoremen in overseas ports. So strikes could cause delays, and that would build up cash flow pressure because the customers wouldn't authorise the payment. We'd sent the meat off on ships. So what problems did that cause? So I had to go through all these types of activities. We looked at risk areas and risk management. We introduced the concept of an annual budget and an annual cash flow forecast, and we projected balance sheets. There was no formalised accounting manual process in the organisation. And what probably was a forerunner to what I ultimately did within ESS BizTools. We developed accountants' manuals to cover the type of matters I've already talked about. How many of your clients have got internal manuals for their processes? Things like debtors. Who's authorised to commit the client's business to various activities? But the real area was the weekly performance and profitability reports. I'd experienced that when I'd worked in the regional office, but I only had a relative small number of activities. Once I got to head office, I realised there were hundreds of these. And each week, the information would flow through, and my team would assemble the results, would compare them to the budgets, and then I would sit down and have a sandwich with the CEO on a Wednesday, or if he wasn't there, a phone call from wherever he was, and basically his opening comment was, "Who didn't meet targets, Peter?" And I would hand over the files on 5, sometimes 10 operations that hadn't met the targets. And he would immediately pick up the telephone and call the area manager. And he expected the area manager to already know what had gone wrong, because they knew the information the previous day. What caused it? Was it an error? Was it fraud? Have we found out how the fraud was committed? Was there just an honest mistake? Was the stock take not done properly? And so on. The real message, though, that I want to give to you is that the reason for the problem was investigated and fixed so that it didn't continue to occur week after week for the rest of the financial year. I'm not saying that next week everything was perfect. It wasn't. It's amazed me how many different variations you could find at times to a similar problem. But the important thing was that variation was examined and the reasons found out. I become aware of a major Sydney retail butcher shop operator who I understand owned over 250 shops. He had them in about 3 different branding names, depending on their locations and the quality of product they were selling. And he had a system whereby if that occurred and a shop hadn't performed to its budget expectations, that manager was withdrawn for special projects in the following week, and a relief manager went in to run that business. If at the end of the next week, the result come up that everything seemed okay, the target was achieved, the relief manager was withdrawn, and the original manager was re-engaged to manage that business. But if at the end of that following week, a problem had occurred again, I understand that that original manager was reassigned or no longer worked in that business because something had gone wrong in the results. We weren't as tough as that, but it's an interesting story as to how this type of information can be used to ensure that the businesses are getting the results. And what that does is keep the business active and everyone on their toes. The CEO was also a keen inquirer about costing information and what if information. What if we did this, Pete? What if we did such and such? What if instead of sending meat to Russia, we send it to Japan? And what's the different processing required? What's the cost differentials? What's going to be the most profitable for us? These sort of questions are asked all the time. Who does your client, your SME client, ask those questions to? Do they ring you and ask you? Actually, I hope they do, because that means they're seeking the service. But I've never found an accountant tell me when I've asked that question that they do receive those phone calls. The what if questions were very interesting. One of the other challenges I found when I became the CFO was that we had a documentation section. Now, I knew nothing about export documents. And to be honest, I didn't really appreciate that I was responsible for the documentation section. I thought that was the sales manager's responsibility. But it wasn't. It was mine, just that someone omitted to put it in the list of duties. I had to quickly familiarise myself with export documents, and also decided I need to know more about exporting per se. So I enrolled for an export market course. It was quite interesting. I learned a bit about documents, but I learned a fair bit about exporting activities in general. The stock exchange also brought its own challenges, because stock exchanges have rules and regulations. More than just what's in the Corporations Act, there's another set of rules. And there were briefing sessions on various issues at the stock exchange that a company secretary had to attend. The annual reports that public companies produce also fell onto my desk, in conjunction with one of our external directors, who thankfully was very experienced at that task and had a real flair for it. That was some of the roles that I was performing as a chief financial officer and company secretary. I think there's others, of course, but I've tried to use that type of knowledge and information in the material we've incorporated within ESS BIZTOOLS. I decided I wanted another change. I decided I was going to go into an accountancy firm and try to implement the strategies that I'd been thinking about on the many hours I spent on aircraft when I was performing that role. And quite early in the piece, I met a gentleman called Dr. Jeff Meredith, who was at that stage at the University of New England. Later he became a professor at the Southern Cross University in Lismore. But at this stage, Meredith was leading a team that had been established at the New England University called the Financial Management Research Centre. Now, this centre had been established by the university in conjunction and with the strong support of the Institute of Chartered Accountants and the Australian Society of Accountants, now known as the CPAs. And the brief was to the Financial Management Research Centre was to develop a series of articles and run a series of workshops to encourage accountants to be more proactive in the delivery of business advisory services to SME clients. And I had that meeting with Jeff Meredith in 1982, a fairly long way ago. It's interesting that the Institute of Chartered Accountants backed the concept that accountants had to be more proactive in the delivery of advisory services back then. I became a strong supporter of the concept of FMRC, and I met a gentleman who's become a close friend and a mentor, Andrew Geddes, who went on to have a brilliant career as, I think, the best accounting industry advisor in Australia. And for 10 years, he was the chair of a company that he had given advice to when it was a one veterinary surgeon and one nurse based in Townsville, which later become known as Green Cross and become a huge veterinary surgery business all over Australia and New Zealand, and a major pet food store operator. So Andrew Geddes had a significant public company experience, which he's passed on various comments and suggestions over the time. So I then talked to FMRC and said, can we buy your system? And they said, we haven't got a system, and we're not preparing anything for sale of that nature, because our arrangement with the university and the accounting bodies is we pursue the path that was outlined in our original agreement. But if you want to develop packages, we'll support you. And that's what we did. And 26 years ago at FMRC in Armidale, we launched ESS BIZTOOLS to 10 accountants from all over Australia, our original subscribers. I decided to leave public accounting practice shortly after that launch date, so I could concentrate on ESS BIZTOOLS and a specialist consulting company that I was developing to offer the services that we were writing about in ESS BIZTOOLS. So I had a real practical arm, and we started to do that. But in 2001, I was invited to give consideration to applying for a special new government program that the John Howard government was launching. And this was called COMET, Commercialising Emerging Technology. The government, through Oz Industry, was looking for 12 business advisors from private enterprise backgrounds. I was the only accountant, actually. The others were experienced business people, both in Australia and overseas. And our role was to help identify people who had developed new technology and undertaking research and development, or were on an innovation path. And they needed to raise capital. They needed to become investment ready. So we had to mentor and train them, not actually do the work. We had to check the work. We had to validate the work. Not many accountants around Australia participated as contractors in preparing business plans, budgets, and cash flow forecasts. I was amazed at that, but not many were involved. I made phone calls, actually went and saw some of the firms that I actually knew. I'd met at conferences and said, will you submit proposals? Oh, no, Pete, we're too busy, tax returns. And by this stage, of course, GST had come into play. And that was creating all sorts of extra work. But that extra work really wasn't helping SME clients, I don't think. They were doing business activity statements, or you were doing them for them. But it wasn't helping them with their bottom line. So the commercializing emerging technology process really brought me into contact with research and development. I'd done some previously with some of my clients, but now I had a whole range of it to go through. I had to make sure that our clients understood that in the COMET program, and that the directors understood the type of planning and thinking and deliberations they would need to take if they were going to raise money from the public. And they had to understand what they were trying to achieve in operating a growing business. They needed business plans that really articulated their vision. And they needed what we now call predictive accounting reports, budgets, cash flow forecasts, projected balance sheets. But they also needed the key drivers analysed: inventory, debtors, work in progress, research and development, creditors. What was the amounts owing to creditors? What was the creditors' days outstanding going to be? What was the debtors' days outstanding? What was the amount of investment in inventory projected to be? All these questions come to play. And directors needed mentoring on the duties and responsibilities of directors. And then we had to try to ensure that they were able to stand up and make an investment pitch, no longer than 10 minutes, to potential investors. Now, I worked with over 100 companies in this program. They weren't all successful, but some of them were, and some are still going very strongly. But the CEOs had to stand up and make a presentation from numbers of as low as 5 to about 100 in a couple of major events that we presented. And we had investors writing checks. One wrote a check for $550,000. It must have been within 20 minutes of the event finishing. I never saw him writing the check, but I found out 2 hours later that he'd written the check. And when I rang him the next day, he said, thank you very much for following up. I rang him to ask whether he wanted a cooling off period. He said, no, you can deposit the check. I know a lot about this company. I've been following it. I read some of the articles that have been in the local newspaper. Did you engineer that to happen? And I had. And he said it's kept me informed, and I've been monitoring their performance. I've been monitoring the industries that their prototype is working in. I've had some good reports. It turned out this gentleman was a very experienced general manager in an activity associated with what the company was working on. But that was part of the byproduct of running public presentations. So all of this work was making an impression on me. Some of it I was familiar with, some I wasn't as much, as to what we could incorporate within ESS BIZTOOLS. And then in 2016, the Australian government, led by Malcolm Turnbull, introduced some great legislation, the crowdsourced funding equity raising legislation and early stage innovation company legislation. Because up to this stage, the only legislation that we had available to us to assist these companies that we were working with in the COMET program and earlier was Section 708 of the Corporations Act, which started in 2001. Prior to that, you had to rely on state legislation, which was basically the same in every state Corporations Act around Australia, which we used to have. They all got withdrawn in 2001 when we got the Consolidated Corporations Act. So it was fairly difficult to raise capital. And if you look at the rules that pertain to Section 708, you'll know that it was nowhere near as liberal in its activity as what now exists with crowdsourced funding equity raising. So when crowdsourced funding equity raising and early stage innovation companies was available, we also read product packages for both of those processes. And we already had it for Section 708. This summary, which is a summary of the career that I've had, of the work that I've been able to undertake, is giving you an idea, I hope, of the diversification of the skills that I've developed. And I have then worked for 26 years, probably a couple of years longer actually, so 28 years, in the development of product packages to embed all this information so that accountants, bookkeepers, and business advisors who have subscribed to our packages are able to utilize that material, the various videos that we've produced, the monthly editions of Business Plus, which is a newsletter we write for our subscribers to badge and send to their clients and their prospects. But we talk about services that I know are all embedded within the product packages that our subscribers have got access to. So we are trying to assist in getting requests for further information about crowdsourced funding equity raising or about research and development and many others from the clients of the accounting firms, so that the accounting firms are able to deliver those services and therefore establish with their clients that they are able to deliver a great range of financial, commercial, management accounting advisory services to assist their clients, your clients, to grow, to survive, and to thrive as a small business operator. If you've got any questions about any aspect of how ESS BIZTOOLS can assist you to deliver an outstanding range of services to your clients, please don't hesitate to contact us. But in the first place, please go to our website, www.essbiztools.com.au, or you can telephone me 0418 190 181 and we'll have a chat. Or you can send me an email, peter@essbiztools.com.au, and I will organise a 40-minute complimentary Zoom meeting with you, where I'll ask you a few questions. You can give me an overview of your firm, your clients, your team, and what your aspirations are for your accounting firm. And I can assure you that this type of work will assist you in what I perceive as one of the biggest problems accounting and bookkeeping firms currently have. And it's not only in Australia, it's all around the world as far as I can work out. And that is being able to attract and retain team members. You will do that because you will be offering interesting and challenging work to your team members, which will assist you to attract and retain great clients. Stay safe. Have a great day. Goodbye.